there. What's going on, everybody? Chris Franks with TexasWest Capital. I've got my friends there, Andrew and Tillman, sitting in the wings. And, you know, the number of y'all that ask if we're brothers just because we're all bald and bearded. I mean, come on, guys. I'm clearly the best looking of the three, though Tillman will argue with that, but we'll see them here in just a minute. Listen, real quick, if you've been following me this morning, you know I've been having trouble with the internet. Just finally got a notice from our provider that their fiber line, one of their fiber lines was cut. So if there's an issue at some point during the stream, just know that's probably what it's related to. And I'm sorry. Anyway, we're going to talk about, there's a whole bunch of ETF news coming out. Andrew says he's got some special news for us today too, as far as I think he said a Bitcoin treasury company. So a lot of stuff going on, and we can all clap once Tillman comes on because he was the big hit at the XRP conference, though this is not Beards and XRP here, which was right after the Bitcoin conference there. I'll be honest, I thought they were kidding when they said that was going to happen, but lo and behold, there they are. So do me a favor, strap in, let's get ready, hit the thumbs up, hit the like, hit the follow, hit the subscribe, share the link, folks. We'd love to get our voices out there. And with that done, let's pull them on in here. Andrew, Tillman, what's going on, guys? How y'all doing?
Yo, how are you, man?
Fantastic.
Mid all morning, I'll tell you. We're also reliant, and you guys know because you as well, you know, with your company and working, outside the office a lot, whatever, with the internet. And man, you know, when stuff happens, I wasn't able to get on Scott's show this morning. I logged in, I guess, right as he exited out of the show. I was finally able to get on, but it is what it is. What can you control, right?
Well, hey, we're batting a pretty good batting average. We haven't had too many technical issues on this show over the last year and so that we've done it. Yeah. So, it's one of those things. Everything fails eventually.
Not me. Well, I never fail.
Some breaking news in the last, 15 minutes. JP Morgan announced that they're going to allow loans to be taken out versus, against Bitcoin ETFs and other crypto ETFs.
Really?
Customers have on their balance sheets at JP Morgan. So, it falls under the guise of watch what they do, not what they say, right? So Jamie Dimon's like, okay, whatever. If you want to buy Bitcoin, we'll
I wonder if he wants you to default. That's the good.
Well, that's the thing, right? So again, watch what they do, not what they say. So JP Morgan is a huge authorized participant on all of the on principally BlackRock's and some others, right?
Yeah.
So by the way, BlackRock's IBIT Bitcoin ETF is now in the top 25 of total AUM of all ETFs that exist anywhere in the planetary system that we exist in.
It's what, 74.5 billion now, isn't it?
It's an insane number. It's an insane
in like 16 months.
Yeah, that's correct.
Yeah.
So JP Morgan is already an authorized participant on that huge ETF, which means they assist in moving money back and forth in and out of the ETF itself. Now they're accepting the ability to take out loans and leverage your position in IBIT and other Bitcoin ETFs. So they're covering it from a couple different angles. Point being is we're at the beginning of the financialization and Wall Street grabbing their hands around Bitcoin. And this is just the beginning, right? Now, taking loans out against Bitcoin ETFs, that's not sort of a revolutionary thing because what really is a Bitcoin ETF? It's really an equity, right? It's an equity that trades on a daily basis, liquid, all that stuff. Sure, spot Bitcoin is the underlying asset, but it is effectively an equity that you can trade on, JP Morgan, Robinhood, whatever it happens to be. So all it is an equity-based loan. They're just allowing you to include your holdings in Bitcoin or Ethereum ETFs associated with what you're wanting to back your securities-based loan on. So while it's an interesting and feel-good headline for the industry, in reality, it's just a rounding error for the amount of securities-based lending that JP Morgan does, or any wealth management organization does in any meaningful way. But again, there was a time.
Well, I will say this. Simply put, they're recognizing it as collateral, which is fantastic news. Like, you can't say that about even gold. I know gold ETFs you can, but you can't go into a bank and get a loan against a gold coin. That doesn't exist in our financial system. So the fact that, the naysayer of all naysayers is open for business says it all to me. And, those types of people, when they take hard lines in the sand against something, their first entry point is always going to be something that allows them to participate and accumulate without acknowledgement of that they were wrong. And so this is a way for him to actually accumulate a hell of a lot of Bitcoin, because there will be a lot of defaults. People will overborrow. There's all sorts of, so this is like putting nets in the water and catching shrimp, and then going, I'm not a shrimp fisherman. Well, you're catching shrimp and eating them. So,
Yeah.
Obviously coming out of Bitcoin Vegas, all the talk was Bitcoin treasury companies, Bitcoin balance sheet companies. And we're seeing that accelerate. Right now there's another one that was announced with the ticker KIDZ. They're taking out again, significant, loans to be able to buy Bitcoin. And what I find interesting about the movement, right? So the movement will pick up speed in a big way. There'll be a significant bubble. That bubble will get deflated, but in the end, there'll be, some really smart companies that do it the right way, that use revenue or raise equity capital to do it. Those types of things, that those companies will persist. But what I find interesting, and it makes the connection between this movement and Bitcoin as a truly remarkable asset, right? So banks have figured out, hey, Bitcoin is the kind of asset that we want to loan against. Why? Because it's instantly liquid. Every cycle that we've looked at, it continues to go up. So if this organization or this person, however they loan against Bitcoin for it to be acquired, if they default on this, we then get the Bitcoin and we get to decide what we do with it. If we want to liquidate it immediately, well, that's a lot quicker than we can liquidate a commercial building in downtown Minneapolis, right? That's a lot quicker than we can liquidate a piece of land in the middle of Minnesota somewhere, right?
And they're likely taking a hit when they're liquidating.
Right.
And you can digitally tie it up too. You don't even have to take physical custody.
Right. So not only the ease of taking control of it, but then the ability to liquidate it inside of minutes, or again, the ability to hold on to it as an asset on an ongoing basis, and all the things that you can do with it when you're holding Bitcoin. So banks are starting to figure that out. It is not difficult to get financing to begin the process of the Bitcoin treasury company or the Bitcoin balance sheet type stuff. It's the movement is going to continue to pick up speed. And I think it's going to be, a big part of the Bitcoin story here in 2025. The ETFs, again, they're the underlying floor associated with price, at darn near 75 billion in AUM, when, BlackRock's IBIT started at zero 16 months ago. It's completely unprecedented. So we're in remarkable times. Every time Bitcoin wants to go lower in this current, particular range that it's in, it doesn't, right? It started to move from 106 and change down to the 104. I don't think I want to go any lower. Let's tick back up, right? I'd love to get your thoughts on that, Chris, from a TA standpoint.
Yeah, man. I mean, it's just beautiful. I mean, if you kind of zoom out to the daily, what you're going to see is you've just got this great bit of rally coming from, I believe that was April 7th, that 76,000. And what we're seeing is just a lot of, higher highs and higher lows. And when they're pulling back, Those lows are, at the worst, finding support at the previous high, and they keep pushing back there. And, again, what I look for is I just look for those 3-wave pullbacks. And, we watch, and if we can break back out above that second wave, man, guess what? We're probably going higher.
Well, and an $1,800 pullback now is just a smidge above 1%.
Yeah,
it's nothing. It feels like a lot in the moment. You're like, oh, if you're looking at the 15-minute chart or whatever, you're like, well, the things are happening, but you're like, nothing's really happening. When you look at percentage moves, you know what I mean?
Well, I think it just has very different price movement signatures this bull run than it ever has. I think anybody that's experienced the bull run in the past expects the God candle. That's what we all talk about and have experienced. Maybe there isn't a God candle. Maybe it's more like a stairway to heaven this go around because of the systematic nature of Wall Street and the cycling of liquidity. And I will say, like, people posting highly leveraged large positions on Twitter definitely doesn't help, because that's just easy pickings. I mean, the market is about seeking out large liquidity pockets and easy to identify liquidity pockets, and that's about as easy as it comes. So, I think leverage is going to be the story in 2025 as it pertains to pullbacks, and I don't think they're very big dips, because I don't think I don't think the amount of leverage compared to the amount of stored value, I don't think that ratio has ever been lower.
Yeah, and and we're seeing, where they keep talking about how the lows on the exchanges holding Bitcoin continue to get lower, and then people freak out. Well, if the exchange volume of Bitcoin is getting lower, and we've got all these billions of dollars every week being bought, there's something fishy going on. I mean, it's a lot, guys. I mean, you have to understand, some of this is a bit of rehypothecation. A lot of this that's being bought and sold in these large tranches are actually already held. So if Coinbase holds, 2 billion in Bitcoin that gets bought by somebody else, you're not going to see that showing up on the exchanges, because it's really just from that one wallet to the other, guys. They don't have to go across. And so there's a lot of little things that kind of go into that make that happen. Nobody's messing with you, though. Nobody's, lying to you about all that. But what was interesting, though, I did see 21 Capital, Mahler's company. Mahler's came out and he's like, okay, hey, guess what, guys? There's going to be no rehypothecation, blah, 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 right? And then somebody brought up the terms of service online. I saw it where it said, user agrees that it can be rehypothecated, et cetera, at any point, which I thought was kind of interesting, though. I haven't heard if Mahler's actually responded to that or anything, but he was quick to come out with that whole video about, oh, it's not going to be rehypothecated. You ain't got to worry about that.
Yeah, right. So terms of service is interesting. At the same time, Jack, I took a look at his Twitter feed a little bit earlier today. He came out with we're going to have multiple wallets. Here's the first one, so you can go look at the wallet and see where the Bitcoin is. Yeah. It's if you're publishing wallets, it's tough to do the rehypothecation stuff without people saying, "Oops," there's
what
a
happened there?
business going on here.
Well,
right?
it's just it's a legal escape hatch that they have to have in there to save the submarine from imploding in the event that it starts to rise too quickly.
Listen, but 21 Capital, that particular organization, we had Jack Mahler's with Scott Melker in our Arch Public Lounge at the Bitcoin conference. And some of the comments that he made were illuminating, and it had to do with where we at with Bitcoin treasury companies. Is this a bubble? Scott is in the camp that it's a bubble, but there's more nuance to it, right?
Yeah.
And his point was, even if it is a bubble and the bubble pops and a significant percentage of these companies have real problems and have to give up their Bitcoin, he's like, okay, that's fine, and I'll buy it. Like, I'll just take it. And what's behind that response is 21 Capital is backed by Tether and SoftBank. There are no larger checkbooks in the space than those two organizations. I mean, my goodness. So he's not wrong. And, I liken the Bitcoin treasury movement. And again, that's different than balance sheet. So Bitcoin treasury movement, Bitcoin treasury companies are essentially just holding companies that are there to buy Bitcoin and somehow do other things just with Bitcoin to create yield, revenue, whatever that happens to be. Bitcoin balance sheet companies are, a group of physician offices in Texas that are adding 10% of their cash. They're putting it into Bitcoin. That's completely different. But Bitcoin treasury companies, I liken it to the .com bubble, right? So the .com bubble, there's going to be 200 of these things in the next 6 months. That's my guess. And it will absolutely push the price of Bitcoin higher. There's no doubt about it. When there's a cascade of problems that occur when Bitcoin's price takes a 30% hit, right? And some of those companies are just way too levered from a debt standpoint. There's going to be some that end up weathering the storm. And when you weather the storm and grab market share, i.e., grab Bitcoin that's now loose for those companies that went bad, you're in just a unique position long term, to really benefit.
Listen, this tale is old as time. This is how markets evolve, and it's no different than what's the guy who made the $100 million bet 3 times?
James Wynn,
James Wynn. It's just a bigger version of that. Companies will enter the game. They'll enter the game 5 years from now when the price is God knows what. Let's say it's at $1.5 million a coin. And then we have this massive retracement back down to 600,000 a coin. And that company and anybody who got in the game recently will get wiped out. And that's just the way the game works. It's all about, the age-old Bitcoin adage is you get the price you deserve. Some will be around long enough to be somewhat bulletproof unless something catastrophic happens with the price of Bitcoin. But it's pick your entry point, and your deployment of capital as it pertains to dollar cost averaging into that entry point is going to be, to some degree, your determining factor as it relates to whether you survive or not, because you're going to be lowering your risk. If a company gets in very hot and heavy and they start growing exponentially quickly in a short period of time, and the price has massive movements from that time period, they have a propensity to failure a lot more than somebody who grows over a very long period of time and accumulates a very good average as it pertains to the appreciation of the price. And it's going to be the same game that's been being played on the individual and the small fry level, but now it's the big boys. And that's just, that's the way financial markets work, is people take bets to be competitively, different than the rest of everybody else, and yields will be being promoted as that aren't achievable, or maybe achievable in this environment, but aren't achievable in the next environment we find ourselves in, and that's the great, sifting of the wheat from the chaff.
Yeah, and that kind of, I think, brings up a good point, because everybody and their grandmother. It's like everybody was like, oh, yay, go, MicroStrategy. And then they were like, oh, no, let's get them liquidated. And now they're on the bandwagon, go. But now they're again going with the, oh, man, they're going to get liquidated. And I think they're focusing on the wrong one. I think what you focus on are those coming in late now that, as you said, are going to come in hot and heavy. They're going to overextend themselves way too much, and really just looking at this whole Bitcoin treasury idea as either the last way to maybe save their company, or just looking at it as, oh, I'm going to come in and really try to do it. If I could do 100 million here, well, man, what could I do with 10 billion? Just overextend themselves. And they're the ones I think that are going to get caught more so than like a MicroStrategy or something like that.
I would agree, but I also think that there's different, philosophies that are behind the companies as well. I know that David Bailey has said that Nakamoto is not opposed to selling Bitcoin.
Yeah.
right? That's a very different model than Sailors. Sailors basically going, we're never selling and we're buying every top. So we're going to get to see who's the smartest is the point. This is free market at its finest.
Yeah.
Try to financially engineer something that's attractive as a vehicle for liquidity and see if the liquidity shows up. If you build it and they come, you built something that's attractive to the markets. If you don't, and here's the fine line. The more attractive it is to the market, the less sustainable and more risky it is by definition, you know.
But even Mahler's is like right between them, right? So Mahler's goes out there and says, "Hey, listen, I've heard him a couple of different times on a couple of different shows, and he's like, yeah, listen, our model is that we don't sell, and we're not going to." He even gets caught saying, "Oh, well, we're not going to sell." He goes, "Well, that's the plan, is not to sell," So even he's kind of like, kind of edging down the middle.
He's the moderate of the three biggest, companies in this area right now.
Yeah, exactly. But these ETFs, though, these ETFs are growing, right? So we've got, we had a few days of outflows finally that just happened here recently, and then they came roaring back in. We've got, what do we got here? We've got over in Russia, MOEX. The exchange over there is allowing futures for accredited investors or whatever, so it's not the retail person, but to trade on futures for the IBITs ETFs. And then we've got Trump's Truth Social. They filed back in, what was it, February for ETF stuff there. And now we've got some updates on that where, let me see here. It looks like that if it does get approved, interestingly, crypto.com is going to hold the Bitcoin. Whereas, all the rest of these have all basically been Coinbase minus, those couple, but crypto.com, to be the holder of this. So, this ETF stuff continues to just blow up bigger and bigger. And then you've got the treasury, type companies coming in with it.
It's equivalent to in 1998 Amazon sold books, okay, and then they sold other stuff and other stuff and other stuff and other stuff and other stuff. So Bitcoin as an ecosystem will continue to grow. Bitcoin will bring in additional custodians. There's a reason why JP Morgan is getting more and more comfortable with Bitcoin ETFs and then again crypto ETFs. Why? Because at some point they'll become a custodian, like State Street already is. BNY Mellon is going to. All the banks will have the ability to custody physical Bitcoin. It's becoming a part of the larger financial system. It's already been written in stone, so to speak, and so you're going to be able to do it. So readying yourself to be able to bank the likes of a crypto.com as an exchange. If you're a State Street or a BNY Mellon or a JP Morgan, the amount of business that is going to exist there, the amount of revenue, the amount of transactions that are going to exist, you want to have a piece of that. You want to be a part of that. Again, a reminder that, people in the crypto space, generally speaking, are much more active than people in the TradFi space. The TradFi space has been taught and learned that you shovel stuff into an ETF, an SPY or a VVV, and essentially you're buying every month, right? Yeah. That's not how the current crypto space works, that there's more activity and more opportunity. Again, meaning that banks that get involved, wealth management organizations that get involved, they can charge higher prices for not only access to these assets, but the ability to trade the assets themselves. So it is, it's not a surprise that we're seeing adoption based on the ability to use these assets in different ways at the highest levels of banking, and JP Morgan really is the pinnacle of that. Whether you like it or not, they absolutely are. So,
and the thing that I think is spot on, Andrew, but I think it's permeating through every layer of Bitcoin. Like one of the things I've been most excited about since the conference is the private sector, private corporations seeing what Bitcoin on their balance sheet does to their ability to borrow money, their ability to expand their operations within a limited time frame to expand, to capitalize on opportunity. Like it's a really the largest force multiplier in creating a delta of change that I've ever seen. And let me give you an example. I'm working on a model right now. The business makes good margins, 25%. So great margins for most traditional businesses. By putting 10% of your treasury in Bitcoin, you have the ability to potentially, if Bitcoin continues to do what it's done over the last 16 years, double your net revenue with 10% allocation. So the force multiplier of accumulation of Bitcoin over time, in the eyes of VC firms who want to expand your business, it adds as a backstop, a risk mitigation tool as it pertains to constantly rising floor of value that's detached from the business model. But it also allows you to leverage the performance of that asset that's outstripping even the performance of the Magnificent Seven into more secure debt and larger debt amounts that only feeds the machine more and more. And so expansion, if you have a successful business and you're trying to replicate that successful business across, hundreds and thousands of locations, the cost of capital and the accessibility to capital are the number one issues. That's it. That's what it amounts to. And so offering a VC firm a model that gives them collateral in Bitcoin physically is the same type of force multiplier in this private sector space as we're seeing Michael Saylor being able to, capitalize on in the public sector space with these huge, like everything that I see about Saylor. The thing that shocks me is just the scale of the borrowing. I keep wondering, when's the money going to run out? Like, how many dollars are out there looking for this home? Well, if I could judge him on his intelligent factor, he would be slowing down if he saw any end in that money pool. And I don't think there is any.
That's the thing, is that banks offer this debt. People need to understand they're not just offering this debt to some nebulous unknown face and name out there. Yeah. They have clients that are gobbling up that debt and begging for more of it, right? Yeah. That there's some level of coupon, there's some return that they can't get enough of. And every time he goes to wants to write another check, the bank's like, yeah, no problem. We've got people banging down our door to buy your debt. And those are simply just customers and clients of the banks that are doing the lending. Yep, we'll take some more MicroStrategy debt. Yep, we'll take some more strategy debt. Yep, we'll do some more preferreds. And they get bought up immediately.
Well, a perfect example of this, in my opinion, would be like a Red Lobster, right? Red Lobster was high on the horse for a long time. If they had been accumulating Bitcoin the entire way, what value would they possess today versus what value do they actually possess? Yeah. They would have they would be worth a ton of money, and it wouldn't be because they're cheddar biscuits. It'd be because they would be holding a ton of Bitcoin. And so the question is how are you as a business hedging against the inevitable, which is you becoming irrelevant? And every business becomes irrelevant at some point. No business lasts forever. There is an end. And so while you're out in the field making hay, what are you doing with the hay? Are you putting it all in a storage container that then the hay can spoil and rot over time? Or are you putting it into the digital gold bar of Bitcoin that's just sitting there for eternity, appreciating in value? And I think you're going to see in the private sector, if I have a restaurant that looks identical, if I'm two franchise owners, one's a Red Lobster that deploys Bitcoin on their balance sheet and one's not, 5 years after success of that business, which one's more valuable. I think the delta is going to be so large that you're going to see a flood of capital that supports small businesses putting Bitcoin on their balance sheet in a very incremental way.
And let's be clear, you know, we're talking about this, but the big point of all this is that's, you know, growth in value of the company without doing anything extra. They're not creating extra locations. They're not creating new services or products. They're not doing, all they're doing is taking that small bit of what they have on their treasury and putting it into Bitcoin and letting that appreciate. And I think that's the significant thing about that.
I agree.
We talked real quickly about Nakamoto and what they're doing, and it's different. And so not to oversimplify it, but effectively what they've said that they want to do is they want to be a franchisor of Bitcoin treasury companies. So they want to build out let's call it a web of companies that are adding either Bitcoin to their balance sheet or are Bitcoin treasury companies, and they simply want to make the pie bigger. And so that is a different, little bit of a different business type plan than just holding sizable amounts of Bitcoin as a Bitcoin treasury company.
Well, so what it tells me they're Andrew, just to interrupt, what it tells me they're going to do when he says he's going to sell Bitcoin to increase the market share, they're probably going to sell Bitcoin to acquire companies and just force them to do this. And they just network that type of a model out. That's what I would bet.
Yeah, that wouldn't be a surprise. But again, there will be flashpoints where the strongest survive, and then the strongest take significant market share, right?
It always works that way, right?
Yeah, it absolutely works that way. I mean, back in, 25 years ago, there were 50 million different types of, internet service providers, search engines, we could name them off, Yahoo, Ask Jeeves, all sorts of stuff, right? Now there's effectively one. And oh, by the way, that one is being disrupted as we speak by AI engines, right? So
being dismantled.
Yeah, right. So it's we're going to go through all of that cycle stuff associated with different types of ecosystems built in and around Bitcoin. But there's a ton of money to be made. There really is. Again, forest for the trees thoughts and sight again is a guy like Larry Fink who says, hey, we're going to 500, 700K. You've heard me say that on this show 1,000 times, but there's a reason why, because he's literally in the meetings or hosting the meetings associated with how do we build out the ecosystem and what do we allow to be built out in the ecosystem. So he knows exactly where this is headed, right? He's already got the roadmap. It's just a question of at what pace do we get there. And so we're headed there, right? I put out a post earlier today that, we get to a certain number by the end of this year. And then by the end of 2026, we're at another number. Now, do I think that we're going to have a pullback between the end of this year and the end of next year? Absolutely, I do. I absolutely do. But again, with Bitcoin, whenever there's a pullback, there's a slingshot higher every single time, right? Yeah. I saw that Tom Lee, said longer term, he thinks Bitcoin gets to 3 million,
right? Yeah.
And even if that's over a 10-year period, that's not far-fetched. I remember maybe 6 months ago on this show, I said, I don't know if we ever get to 500K but situations change, the landscape changes. And so, Bitcoin treasury companies and balance sheet companies were like an N of 2 at the time that I made that statement. It was MicroStrategy and MetaPlanet. Nobody else cared. The top has been blown off of that. So we'll see where we go, but it's what a space to be in right now.
And now, speaking of MetaPlanet, there's that South Korean media firm that's out there trying to raise 500 million for a Bitcoin treasury, saying that they want to be the Korean MetaPlanet out there now as well. And that's coming at a time when that new president over in South Korea, who just got elected over there, just under 50% of the election, he promised, to bring in the ETFs and the crypto and do all this stuff. And so now he's supposedly racing over there to get the ETFs, approval stuff going on over there. So, that's the 4th largest economy over there in Asia. So,
there's going to continue to be movement, and I'll say this: like GameStop, they bought $500 million of Bitcoin, but that's literally dipping their toe in the water as a balance sheet company, right? They've got nearly $5 billion that they can do. So my point is that kind of stuff will keep happening. It's going to keep happening. There'll be an acceleration of it, up and to the right. Then there'll be a little bit of a pullback, a slowdown, but then it'll continue to happen, because the real base layer to all of this is Bitcoin is almost magical capital, right? It's a magical asset, because if you're a bank or you're a VC or you're a private equity company, if the underlying asset underneath a company is Bitcoin and you have instant liquidation capabilities or holding on to it for a longer period of time, and it's going to go above the price that you acquired it at, that there is no other asset like that. It's just extraordinary. Yeah, the reason why companies go public, by the way, is because they create their own version of magic money, right? Which is their stock price. Then they go out and they buy other companies and do other things because they have this new currency, right? Bitcoin is that on steroids, effectively.
Yeah, and so we can talk real quick about what the average retail person is going to end up doing here. I think they're going to get caught up in the day-to-day news and things that happen. And all of a sudden, at some point this year, probably later this year, they're going to be like, oh my God, it's the end of the world, blah, blah, blah. And it goes down. But 5 years out from now, have they just, again, I always point out to Gary Cardone on this, because, him and I had that conversation a while back on Spaces where we talked about, listen, you should just, for most people, when it comes to Bitcoin, you shouldn't be trading it. You should just be consistently buying it. And if you're finding that you don't have enough money that you want to spend, go out there and mow some lawns, create some extra dollars to go there and buy some more Bitcoin and go on, because, the goal becomes how much do you have in terms of Bitcoin, not how much do you have in terms of dollar pricing. And so when you look 5, 10, 20 years down the road, what you find is you've been just contributing to this thing that has effectively over that time generally gone up in value, versus trying to trade it along the way. And you get done and you're like, damn, 5 later, you're like, man, if I had just left that in there and just not tried to trade that, I wouldn't be out of it. I'd have this much greater thing. But this is the reality, right? When retail comes in, and this is something I think we kind of inadvertently really focus on, which is, listen, guys, here's the bigger picture. Here's the way your bigger players are setting themselves up. Here's what generally happens. And it doesn't happen overnight. Happens over a period of time. So you've got to widen your lens. We're trying to give you that roadmap and let you know so that you don't get caught up in the day-to-day. If you got caught up in the day-to-day over the past year, it seemed like every damn week it was the top, right? I mean, once we hit 105 or whatever, that was it. That was the top. And then we came back up here again. Look, we're right. And now we're up at 112, and we pull back. The top callers are out there again. It's the end of the cycle. It's done. And people have been fighting that, not just this last year, but really this whole kind of, in a way that I haven't seen. I've been in since 2017, January, in a way that I haven't seen since that point. There has been more top calling the entire way up than I've seen anywhere else. And so if you're just coming into the market, you're a brand new trader or investor, you really don't understand markets and how they work and these bigger concepts, you're going to get caught up in that. But if you can start to understand what we're talking about here and how this lays, the ground floor for much bigger things, and how that inevitably leads to price, rallying higher. Well, you start getting out of that trying to time tops and bottoms, and you get into that mindset of, well, I'm just going to keep collecting this because I got, 20 years ahead of me. I got 30 years ahead of me. I got 40 years ahead, depending on how old you are. Man, that's some serious potential, how do you do a few decades down the road?
Well, I think you're spot on. I look at it from a little bit of a different angle. It's like, if you're if you have any of this concern, you're over allocated in my estimation.
Yeah.
I got into Bitcoin by mining. And what I loved about that is it's managed incremental growth. I started with 1 miner. Then I went to 2. then it went to 3, and then I kept multiplying that based upon natural growth and not me overextending myself and going, you know what, I'm a new miner, I'm going to order 100 units out of the gate. That would have been a big mistake.
Yeah.
And because the cycle of mining is a 4-year epoch, and if you put too much capital to work at the wrong time in the epoch and the next iteration of miners come out, you're toast. Your whole business model's blown up. So it's much better to get allocation incrementally throughout that epoch period. Same thing exists with buying Bitcoin. Don't look at it as a get rich quick. I'm going to load the boat because I've picked the bottom and it's going to go up. Think about it as a wealth preservation tool, a savings account, if you will. And one of the things I loved about Gary, and I continue to love about him, is his conversation with his audience about taking depreciatory assets that you know are going to zero. If you have a car, if you have no savings account and you have a car and you really reached for a really nice car, disproportionate to how much savings you have in your bank, there's nothing wrong with selling that car and harvesting some of the value that you have in it and putting it into Bitcoin. Why? Because that car is going to zero.
Yep.
I promise. It is going to be worth zero in a very short period of time. So putting it in Bitcoin, you know it's not going to zero. And so it's a plus any way you look at it, even if you do arbitrarily pick a bad place to put that capital into the curve of Bitcoin. But it would be much better to, like, Chris was talking about, look at it as a savings account and put your sweat into it. Go earn extra money doing things and then put it in there. That savings account over time, because it doesn't erode in value, it actually expands in purchasing value. And the way you can prove that to yourself is like, I think the average home you could buy for 200 Bitcoin, 5 years ago, and now 3 Bitcoin, so, a huge expansion of purchasing potential and power. And so just do it incrementally. And then you don't care where the price goes. In fact, you've trained yourself through discipline to like the dips, because you always have a little bit of money to go buy them. And you're just going, oh, this is a great average curve that I'm accumulating Bitcoin over. If you do that, to me, it's a stress-free ride. And that's what you should be shooting for, is like, how can I use Bitcoin to help my quality of life go up, not add more stress and dependence on something that I can't control. If you're making position sizes that are big enough to where you can't sleep at night, too overallocated.
Yeah. And I love that you brought up Bitcoin mining there, because one of the things I wanted to mention here was Mara. So Mara, I believe, is like I think they're like the second largest corporate Bitcoin holder now. They had a record-breaking month there in May. They had they have 282 blocks for one, so that's 38% month-over-month increase. But their total Bitcoin holdings then are now over 49,000. And they had, the 950 Bitcoin produced were the most since the halving event in April of 2024. So they're doing good. And then you've got Riot Platforms, which came in with about 400. They produced like 514 Bitcoin in May, which is about 11% month-over-month increase. But they're holding, around 19,225 Bitcoin, becomes the fourth largest Bitcoin holder as well. So, we tend to focus on, strategy, which, they bought, a measly 705 Bitcoin for about 75 million. I think that was probably just this weekend or whatever. But they have almost 581,000 Bitcoin. But, we have to get off just strategy and look down there at what these other, companies are doing down there. And you're seeing these miners kind of coming in there and really doing the whole, listen, we're going to produce and hold and buy and hold Bitcoin. You got to ask yourself why. Why would they do it? They're out there making Bitcoin. Well, if it's good enough for a Bitcoin miner to go out there and hold the Bitcoin they're making and or buy additional Bitcoin, it's probably good enough for you to do as well.
Well, if you're them and you're sitting on, multiple years of operational cash, you don't need to sell right?
Yeah.
And what's interesting about the development of like the borrowing against the ETF, it opens up another channel, like a liquidity loop, where if I'm a miner, I go, okay, I'm going to split my Bitcoin holdings up 50% physical, 50% ETF, and I'm going to go broker that OTC deal behind the curtain to go acquire a ton of ETF shares. Why? Because now I basically have a line of credit at JP Morgan that allows me to call them up and say, send me a ton of cash. We're buying a new mining company, or send me a ton of cash. And that is a flexibility that's going to only enhance the miner's ability to not sell into pressure. And that's fantastic news, because that means the folks who have the most Bitcoin now have lots of means of borrowing that doesn't include them selling their Bitcoin, which is gonna hopefully be really good for the price.
Yeah, that, you know, there's a strain of Bitcoiners that think, you know, access to the banking system is bad. The reality is it's a force multiplier.
Exactly.
In every way in every way that you could possibly imagine, it's a force multiplier, because, you know, then you have the ability to leverage positions to buy more Bitcoin. You have the ability, you know, if you're an organization, to invest in companies that are then holding Bitcoin on their balance sheet. You have the ability, like Tillman just talked about, you know, to buy miners, to buy assets associated with miners, again, that doesn't allow them or causes them not to have to sell their Bitcoin stack, as was the case in previous halving. So there is, you know, while the, you know, tried and true and somewhat crusty now cypherpunks, you know, would want banks to stay away from Bitcoin for forever. Again, the reality is that the scale of growth of an asset, you know, when it begins to go quote unquote hyperbolic along that curve, is often associated with increased availability and banking, and, you know, whether we love it or not, some version of leverage.
Yeah.
So, you know, we're entering that space, and you know, we should be aware of it, and understand that we may have moments where that leverage is, again, a force multiplier, and in moments where that leverage is uncomfortable. Let's put it that way.
And it, you know, so again, it comes all down to, you know, as with any other time you're borrowing money, what do you use that money for? If you're borrowing money to look rich, you're likely going to be one of the first ones that gets caught when things go the other way, right? If you're using that, you know, that borrowed money to increase your production of value, you know, your increase in value, if you're buying the, you know, those,
you're buying cash flow.
Yeah, you know, those are the things that's the way it should be used. That's the way it should be used. If you're retail, most of the time you're not doing that. You're borrowing against your Bitcoin to buy your Gucci bag or your Rolex watch, or, you know, something silly like that, your Lambo, something that goes down in value, versus taking that, you know, if you're going to do it. And by the way, guys, listen, especially if you're retail, you don't have to, you know, as this becomes more and more available, because it will, you don't have to, you know, borrow money against your Bitcoin. But I would say this: if you're going to borrow it against your Bitcoin, make damn well sure that you're buying it, that you're borrowing it to get into something that's going to produce some kind of income, some kind of increase in value, not a depreciating asset. Because
I think when you part with capital, you have to be buying cash flow. That's the only good reason to part with capital, period. The end. Like, you have to. And you know what's interesting to what's happening is it's akin to the oil and gas market, right? So you can play in the oil and gas market on a variety of fronts. You can actually be a wildcatter that's out there flying airplanes and shooting seismic over land and trying to figure out where the gas and oil is and trying to poke holes in the earth to find it. You can be the guy who's operating the well for that guy or drilling the well. You could be a royalty holder that's a passive investor in that commodity production. You could be somebody who just buys oil and gas ETFs and stock products. Like, there's this chain of products that's available for you to participate in owning that commodity. What's interesting is, think about how many private companies and how many public companies go out and try to invest in the the highest reward portion of that market, which is the wildcatting and the production.
Yeah.
Very few do. Why? Because it's fraught with risk. It is the most risky thing in the space, and you got to know a lot of expertise to go dabble in that space. Bitcoin, you can get right to the head wall if you want without any of that additional risk being incurred. And so what I see, the money potential that could flow into Bitcoin is literally the potential of what money could flow into the oil and gas space in wildcatting if there was no risk in drilling dry holes. And that's a lot of potential. That is just, it's beyond the force multiplier. It's just unreal in terms of how much capital is seeking that type of return. And as long as they know that there's a way to financially engineer it to the risk profile that they're after, they're going to do it. You see what I'm saying? And this allows them to dial in. Like, I want 86% exposure to Bitcoin's price volatility. I want 42% exposure. I want 10%. You can literally now, with all of these different tools, you can design exactly how much risk you're willing to take as it pertains to Bitcoin and the associated reward attached to it, right?
Yeah, exactly. Oh, you're boring Andrew there. So.
Yeah, when he starts to talk about oil and gas and wildcats and stuff, you know.
Oh, man, this is Texas. You know, I'm outside of Houston here, Texas.
I get it. He hasn't.
I guess you've never gotten a royalty check in the mail because you want to talk about it.
He hasn't given us a good conspiracy theory lately. You know, I'm waiting for the next one. It's been too long.
The conspiracy theory of today is, when did you decide to go top button on the polos? And is that just to highlight the length of your beard?
You know what? It's a real commitment to the Urkel look is really the way that I'm
I don't know. I think you've now found a lane where you've created such a distinctive look for yourself as a KOL. It's like Jeff Goldbloom. It's like you just look at him and remember his face. You just know.
Yeah, that's right. That's right. I'm glad that you noticed, and I'm flattered. You know, I am flattered a bit. It's nice. It's nice.
I mean, you're turning into an emoji. You almost look AI at this point.
We just got a comment that says Canada getting Arch Public is like Christmas. We're not a whole lot of weeks away from that happening. So
yeah, we're real close.
Yeah, hold on to your something there.
In fact, Roy, if you want to reach out to our team, we're looking for. This is hot off the press. We're looking to do a soft launch at the first of this next month, and we're picking kind of some pilot people to be the guinea pigs to see if all the API bridges work, and to run with this as a kind of beta version testing. So if you're interested in that, reach out to us, because we've got a handful of people that are.
Somebody like Crypto Chewy, he's been begging on that for a while now too.
Yeah, we're just building a list of folks that want to be involved in Canada, right? I think we've got nearly 100 folks already. So if you're in Canada and you want to use our products, call us up, email us, DM us, whatever it happens to be. We'll get you on the list, and as soon as we go live, we'll get you set up.
So there.
Awesome, Ray.
Speaking of which, there was a case study that our team did about a week and a half ago. That's my favorite case study associated with Arch Public and our Bitcoin arbitrage strategy, because it's remarkable what the outcomes were. And it was from the 2024 Bitcoin conference in Nashville to the Bitcoin conference this year in Las Vegas. If you'd used Arch Public's strategy, what would the outcomes have been? Now, we do all of our case studies with a base layer of 100K as the starting capital. And what the outcome was is you ended up with an additional 3.8 plus Bitcoin. You took 98 total trades. Your average price on that Bitcoin was $53,000 and change. So your quote unquote DCA price was 53 and change, significantly less than where we are now, obviously. And then you generated based on the arbitrage work that the strategy does, you generated an additional $52,000 in cash yield. Okay. So in just 1 year, from one Bitcoin conference to another, now all caveats that Bitcoin has made a pretty substantial movement from there to there. You grabbed almost 4 Bitcoin. You have,
but it goes to your point though, Andrew, that volatility, if addressed correctly, can be harvested.
It's a feature. It's a feature.
It's a feature.
So everybody wants to ask, on Twitter, anywhere. They want to know if you're talking about yield with Bitcoin or any other crypto, where does the yield come from? It's an easy answer with us. It's volatility. Where does the yield come from? One word answer: volatility. If you reply to one of the posts we do, where does the yield come from? Volatility. 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 That's where it comes from. Simple.
I thought for sure your response was going to be your mom. I mean, we're Gen X. That is the classic response. I thought for sure that's where we were going with that. But
well, Chris, you can talk to this in spades as a professional trader. But as your price moves away from your original entry point, should you or should you not be taking profits?
Well, yeah. I mean, if your goal as a trader, you've got two. I take this all the time. You've got two jobs as a trader. That's it. One, use proper risk management. Two, consistently lock in profit. That's all. If you can do those 2 things, you're going to be successful.
And so as Bitcoin's price is doing this, ask yourself, every time it does this, did I lock in any profits? And if the answer is no, you're not using our algo. That's the point.
Now imagine if you're a small or medium-sized business and you would have executed that strategy just with 100K of revenue, right? You now added 52K of revenue to your bottom line, and you're now holding almost 4 Bitcoin, right? By just signing up and saying, hey, let's do this, and then you're not hiring another employee, you're not putting them through HR, there's no health insurance involved, nothing. You're not training them on sales to go create another 50K in sales, none of those things, right? Yeah. None of those things. Just taking capital, using a tool, boom, you've really increased your numbers across the board. It's extraordinary stuff.
Yeah. And by the way, the cash yield can be harvested in down markets, in up markets, in trending markets. Volatility on a micro and intermediate level are here to stay, my friends. They in fact, the stronger Bitcoin's price becomes and the more liquidity in it, I would argue the more violent the short-term volatility will become, because it will all be liquidation events of highly leveraged positions. And that is a waterfall cascade event until the liquidation event happens, and boom, there's a floor. And I already see that type of signature in the price action that we have today. It's only going to get tighter and tighter and more prolific.
Yeah. And this is the reason why, when I started this show, I asked these guys, we should do this. Because the product that you guys have is a great product, and that goes with the other side of what I do, right? Again, it's all about trading, but I think that even if you're a trader, as I continue to say, you should have some sort of Bitcoin bag sit on the side that you just add to constantly, and you're not taking it out. You're not trying to trade it. You're not selling it for anything. It's something you keep for long term. And so when you think of it that way and you go, okay, well, how can I maximize what I'm doing rather than just buying and putting in whenever you have it? You use this arbitrage strategy, instead of just kind of maybe going up like this, like this over time here, you're kind of going up at a more exponential level. And, if your goal is to collect more Bitcoin, you absolutely should be figuring out how to do that without actually going in there and trying to trade Bitcoin day in and day out. Now, that doesn't mean you can't trade it fine, but trade it in your trading account. Make sure you do have this other account over there that you can just continue to collect it, because all you got to do is look back 3-4 years at a time, every 3-4 years at a time. If only you would put some cash in, just at that forget along the way, but just at that one, what does Bitcoin historically show? It continues to go up, right? And so it's nothing you look at year over year. It's something you look at every 3 or 4 years. And you just kind of keep looking at it that way. And I think that's really the smartest way of going about it. And
Well,
that doesn't matter if you have 20 bucks or if you have 20 million.
Couldn't agree more. And I think that the relative value of the 20 bucks to the 20 million to what your lifestyle is and the income level that you have is the most significant thing. You cannot play with scared money. So anything that you're trading with, you have to be willing to lose, and you need to try those shoes on emotionally before you start trading with it, because trading is risk. It's risk. That's why you get paid for it. That is what you're doing. You're trading risk for money, and you need to be ready to suffer the consequences of that risk and really try it on for size. And that's why I think the moral of the story that I've learned, as much as I like the sexiness of trading and I still do it, the moral of the story is the boring, simple stack sats method should be your 90% is the way that I look at it.
You know what's strange? The trading risk for money seems like, kind of the theme of my last 2 marriages. I don't know. That struck a chord with me. That's really.
Was that why we got the
That's a force of the universe, my friend. That applies to
a little
everything.
too deep on a Wednesday. I've got to say, trading risk for money. You know what I mean?
Yes, get that book.
I got the book, man. It's in. I'm going to start reading it.
I love it,
got
man.
in today.
I love it. It just got to you today?
Yeah.
That's crazy, man. I have people.
Well, but I've been at the conference, so I literally just picked up huge.
I was going to say.
No. I just picked up my mail from being gone from a week, so I've been sorting through huge piles.
Yeah, we spent a week.
In case y'all didn't know, Tillman didn't just stick around for the Bitcoin conference. He really did end up speaking at the XRP conference.
Yeah, that's right.
I thought that was a joke. He was really there.
I threw an apple and an egg at him while he was up there, speaking at the XRP conference. He dodged. He's an athlete, so he was able to dodge and keep going.
Listen, I will tell you, I felt right at home. Those are my people, and I'm not a 589 guy, and I had my problems with Ripple for a while, but the acquisition of Hidden Road, the creating of the stable coin that they did, and the acquisition train that they're on as it pertains to not only buying users but buying environments, that the depth of liquidity that they can provide in the form of XRP. I think that they, just like any industry, your ability to adapt is your ability to survive. And they have so much money now, and they're doing so much for the ecosystem. It may not be the cross-border payment original thesis that they came out with, but I'm pretty convinced that they're kind of here to stay, and that they've suffered the hurricane, and now it's time to rebuild. And who gets to rebuild the quickest? A company who is down to its last shingle, or a company who has $100 billion that they can tap into?
Well, I guess they got more money now that they don't have that lawsuit anymore that they're fighting still.
Yeah, I mean, listen, they had a headwind that was 100-mile-an-hour headwind for the last 8 years, and now they've got tailwinds.
Yeah, it is. A week in Vegas might as well be a month in West Texas. I mean, it's brutal. I mean, it's absolutely brutal. I came back, and I don't even remember what happened yesterday, given the fog and almost like zombie-like existence that I was in. I took the red eye home on Sunday night to Monday morning. That was an enormous mistake. So yeah, we got a lot done. We got a lot of content that we put together. Awesome stuff, with the personalities that we hosted with Arch Public and Scott Melker. But at the same time, a week in Vegas, and here's the truth, man. It was like 100 to 105 every day there. I didn't go outside but to get into an Uber like 4 times. So I was inside a hotel casino for a week. Like, they could make movies about that. I'm certain that they have. Yeah, it was, there were some hangover moments, yeah, it was a good time, but it's that's way too long in Vegas.
Back to the real world now.
Yeah, that's right.
All right. Well, hey
Yeah,
guys,
it definitely was intense, but I will say this: there's a lot of griping online about no Vegas. I loved it. I think they should do it in Vegas every year. I think it's the only city that can truly accommodate that type of a crowd. It felt like a big slumber party. If you've ever gone with like your family members or your extended family on a trip where you're able to rent a giant house with 15 bedrooms, it felt very similar to that. There were very notable people, politicians, and people in prominent positions of power that you'd walk through the casino floor and see them with their dog gambling at the blackjack table. It was really a surreal, kind of incredible
so that's why
atmosphere.
that's why you didn't show up for the show last week.
Yeah, that's right.
Listen,
That's right.
we had to better deal you. There were too many things going on during that time period.
Andrew was all talking about how you wouldn't answer his call. You missed the call that y'all were supposed to have. Man, he was ratting you out left and right, man.
Listen, that can happen time to time. I'm not opposed to it. Rag away. I can't be in two places at once. This is the bottom line.
Yeah, man. Anyway, hey, listen, guys. Glad to have you all back, both of y'all, this week here. I think we had a great show. A lot of talk. But, I mean, God, man, just at the end of the day, the amount of ETF information that came out over this last week and coming up now is just insane. And really, that's been the catalyst to bring about everything else that's happening. If there was no real demand for ETFs, Bitcoin treasury companies, balance sheet might not be such a big thing. But that ETF came out there and they said, whoa, and now you've got everything else coming. You got products coming off that, trading off that, loans off that. So just keep your eyes open out there, folks. Pay attention. Stop listening to the nonsense on most of social media. If you feel emotional when you read something on social media, it's probably best not to pay attention to that particular thing at that time.
Well, it's best to do the opposite of it, typically.
Yeah. So other than that,
I want it to be noted on this show that I am an extraordinary top talent at blackjack. I don't care what Tillman says.
My gosh.
I am a top talent at blackjack.
I'm not going to talk money on the show.
I'm unconventional, but I win
because
money.
It's inappropriate. But let's just say that Andrew made a quarter of some people's annual salaries in about 30 minutes. And I was kind of curious, like, hey, I wonder if he knows what he's doing. So I left my table to go play with him. This guy was hitting with 14 with a 5 showing and winning. It was the most remarkable streak of dumb luck with a capital D that I have ever seen in my life.
He was laughing so hard that he could hardly talk. But what he did say to me is, you have no business playing this game.
Listen, even the dealer was going, sir, you don't want to do that. And he's like, hit me. I'm on fire.
And there you guys go. If y'all were in Vegas for that and you did not attend his table during the blackjack whatever you want to call it.
Nothing will frustrate you more with life because it's beyond reality. I don't encourage it. I left scratching my head like, what? Lord, like this is a different paradigm that I'm not used to.
Why am I working so hard in life with this?
Yeah, why play by any of the rules? Just hit on 19. Who cares? You'll hit the 2.
Oh, Lord have mercy. All right, that'll be it. I'm out of here. Hey, listen, guys, as always, remember the only thing you control is how much you lose. Follow these guys. You can follow them there. Andrew is AP_abacus. Tillman is over there, Texas OL. Oh, he's not going to say it. I gave him the opportunity to say it. He didn't even say it.
Listen, if you don't know it by now, you won't ever know it.
Below, man. I've got it written down below. You have to put the 6 and the 1 there at the end, guys. And of course, their company, Try Arch Public. They're on X, or you can just go see them online at archpublic.com. Our TexasWestCapital.com domain is down at the moment, but you can still reach us at members.TexasWestCapital.com. And real quick here, we've still got some seats left. I put out a little special. It was only 20 people are going to get it. Normally it's $970 a year for what we do. You can get in for $553. Use the promo code SUMMER2025 on the annual for that. And there you go. Other than that, like Tillman showed you there, get the book, guys. It's a great read. It's enjoyable. It's a lot of fun. And it's a great kind of breath away while still staying within the whole Bitcoin ecosystem. That said, y'all have a great week. Trade safe. Gentlemen, I'll see y'all next week.
See you guys.
Take care, everybody.